This training is all about helping you choose the right neighborhoods so that you can have much more successful rental property investments. My name is Greg Cohen with JWB Real Estate Capital. And again, super excited to be here. We are going to jump right into it today and get the most that we can out of this presentation. And if at any time you guys have any questions or we run into some audio video stuff, some technical difficulties, please make sure that you use that chat box, the questions. That's how we know. It's kind of lonely on this side when you're doing a webinar presentation. And so it's always great to hear from you all. And hopefully they're really positive comments. Hopefully they're not IT issues. But, you know, if we have those every once in a while, we love to hear that as well. So without further ado, we're going to jump right in here. So I did want to make sure everybody knew that we're going to do a little bit of bribery here today. What I love to do is to get interaction on these webinars. I love to do that not because it's necessarily for me, but what has been proven is the more you interact, the more you learn, the more you take away from this, and this is all about you. And so with that in mind, I wanted to give you an incentive, an ethical bribe here to be able to get the most out of this. And the thing I'm going to bribe you with is my favorite book of all time, which is Rich Dad, Poor Dad. So I'm going to be giving away a copy of Rich Dad, Poor Dad to one lucky listener here. And we're going to be giving it to the person that both I feel and my assistant Kate, who's off camera here, but still she's going to be making the final call on who is the best and most engaged listener here. So at all times, questions, comments, concerns, things you want to know, chime in, fill out the questions and answers box, the Q&A box or the chat box, and then we'll be deciding who's going to get this at the end of the webinar. You do have to be in attendance at the end of the webinar, so don't think about cutting class early, okay? And we also do have folks, I know folks would like to know how to get in touch with us here at JWB. We do, if you want to take down this URL, you can sign up for a time to speak with a member of my team by going to chatwithjwb.com. A little bit about me. In addition to being the most advanced technology guy you will ever find, not really. I'm the co-founder and CEO of JWB Real Estate Capital. I do own over 300 rental properties, so I can speak to you from experience of putting literally millions of dollars on the line in accordance with these theories and practices I'm going to teach you today to make sure that you're making the most successful rental property investments. JWB serves over 1,000 clients. They come to us to purchase turnkey rental properties. So if you're somebody who wants to own rental properties, you don't want to do any of the work, you want some company to handle everything for you and just send you the rental income every single month, that's what our clients demand of us. And so we do serve over 1,000 clients, purchase thousands of rental properties with us, and we manage over 3,000 rental properties to date. We manage over $350 million in assets. So we have a great responsibility out there. And we do have over 80 employees here at JWB. I think it's really crucial when you're looking at other turnkey providers to look at the ones that actually do have a large staff in place. It's really hard to produce this type of passive experience if you only have a few people on hand there. So, and we do offer campus tours for clients and everyone. So we would certainly love for you to come down and meet us here in Jacksonville. I'm going to start off here with telling you a story about how buying a house in the wrong neighborhood almost ruined my life. And I don't take that lightly. That's literally almost ruined my life. Here's a picture of my wife and I on our wedding day. My wife, Alex, I love her. She is truly amazing. And I'm telling you that by not knowing how to invest in the right neighborhoods and not how to buy, I bought properties in the wrong neighborhoods in the beginning, it almost prevented me from being able to marry my beautiful wife here. So the story goes that while Alex and I were dating, you know, I was certainly trying to impress her parents and her brother, and you know, and I had known her since high school, but you know, they wanted me to subscribe to a very high threshold, and so I had a lot of pressure to make sure that my wife and her parents and everybody, you know, thought I was worthy, which is cool. It's really cool. So, of course, in 2006 when we started JWB, you know, we've achieved a lot to date, but in the beginning, I'm not going to lie to you guys, right? It was tough in the beginning. We were struggling to figure out like what to do, like any small business in the beginning. And 2006 and 2007, we know, was a kind of a crazy real estate time. So the story goes that I had planned this whole day after dating my wife for a long time and getting to know her parents a little bit, it was a big step for me to bring them up to Jacksonville, and I planned this lunch with them, and I planned this property tour of the properties that we had recently purchased. And I really, really wanted to impress them. The problem was I didn't know the right neighborhoods to be investing in. And when I was looking at what I thought the right neighborhoods were, is I was only looking at the numbers. And as many of you can probably attest to, when you're making decisions on properties, the numbers may tell one story, but actually seeing the neighborhoods may tell another story. So I was really fired up about the numbers. And I looked at these houses and I said, oh man, these are going to make great rental property investments because the cash flows are high and the return on investment's high. I didn't even see the way the houses actually looked. That's how naive I was. But so after I planned this really nice lunch and, brought her entire family up, her brother, her mother, her father, I said, let's go and take a look at the newest houses that I purchased and the thing that I'm going to be building here, this business that I'm going to be building to hopefully take care and support your daughter one day. And this is where I took them. I took them to a street that looks like this. Now, this is clearly the wrong type of neighborhood to invest in. The first house we ever purchased was actually this one right here. I will never forget it. And it didn't look as bad as this. This is actually what it looks like today. It clearly has not gotten any better. It looked almost as bad as this when I took them there in 2006. And as I was driving up, her mom wanted nothing to do with checking out that house, but I said, oh no, it's fine, come on in. So I literally walked her mom up, who's like the most elegant lady, to the door. And as I got to the door and I started to open up the key with the lockbox, I realized that there was something moving inside the house. And I looked in and found out that there were bums in the house and freaked my mother-in-law out for a long, long time. She wanted nothing to do with talking about real estate or rental properties or the thought of me marrying her daughter one day. So quite a terrible turn of events because I did not understand where to invest. And I hope you all will take heed to what we're going to talk about today and don't screw it up like I almost did. Let's talk about the 3 keys to the right neighborhood here. So these are the things that JWB looks at when we have purchased. Now we've purchased over 3,000 properties in our existence here since 2006. And these are some of the characteristics that we think are the most important. So hopefully you guys will follow these same characteristics that have served us and our clients so well for so many years. The first one is that when you're investing in rental properties, you want to be in below middle income neighborhoods. Okay, that might surprise some of you, right? And I'm going to throw this question out there to all of you. Why do you think, this is a good opportunity for you to take the lead for your rich dad, poor dad ethical bribe here, but why do you think it's important that you be investing in below middle income neighborhoods? Maybe as opposed to middle income or above middle income neighborhoods. Why do you guys think that is important? I can see we've got Juan said they'll be renting than buying. That is a great point, right? That you have more renting going on in below middle income than buying, so you have significant rental demand. It's a very good point. Let's talk a little bit more about cash flows and returns, because at the end of the day, the reason why everybody is coming to this asset class is because you got to get more rental income coming in than expenses, right? You got to make this a positive cash flow situation. And of course, you want to be able to hold on to this for long-term growth, right? Well, if you want to go to those middle income and above middle income neighborhoods, you're missing the first point. Because if you run the numbers on those types of neighborhoods, the purchase prices are too high there. The expenses will not be covered by the rental income. And so to Yuan's point, where you have less rental demand in those higher end neighborhoods, so rents do not keep pace with prices. And so if you go to the neighborhoods that look the best, right? The neighborhoods that are middle income and above, it might look good to you. You might be able to show all of your friends and family, hey, look, this is a nice house. You can put it on your refrigerator and show everybody. But at the end of the day, you're going to be in pain when it comes time to look at your cash flow because it's going to be negative if you go to those types of neighborhoods. Now, on the other side, you've got low income. You know, if you need to think about what low income looks like, go back a few slides here, right? What I just showed you, that's a low income neighborhood, and you don't want to go there either. We're going to talk more about that in just a second. And Keith and Alexa and Jamie, thank you all for jumping in here too. Keith says that they're more likely to rent versus buy, so the same point. Alexa says that they're affordable to a larger audience. That's very important as well. And then Jamie says higher rents, more potential tenants, better cap rate. All very good points there, right? Jamie, especially when we're talking about cap rates, the main point I wanted to drive to everybody is that you have to give up something in all investments. You've got to be comfortable. If you're investing in rental properties and you want it to cash flow, you've got to be comfortable with it not being the most visually appealing neighborhood out there, because the most visually appealing neighborhoods do not meet your cap rate standards or your return on investment standards, right? Those are very similar in that case there. So thank you all for jumping in there. Kate, you're going to have a tough decision here as far as who is going to be that lucky listener here. So below middle income is what you want to focus on there. And you want to be surrounded by jobs. We're going to talk a little bit about that today here. And the third point is your crime. You want to be in a neighborhood where there is not violent crime for obvious reasons there. So just to give you all a visual of our footprint here in Jacksonville, I think there's a lot to be learned about looking at where people put their own money, and especially we've been doing this for 13 years now, so you certainly have a lot to learn from where we have put our own money there. So this is Jacksonville, and all these little points along the way here are all the properties that clients have purchased from us and that we continue to manage today. As I mentioned, clients have purchased over 2,000 properties. We actually manage over 3,100 properties today. And what you start to see is that they're really clustered, So there's 4 main neighborhoods that we choose to invest in. And, you can start to see what they are here. But if you look at all the purchases that we make, we define it in these 4 neighborhoods because they meet this criteria, right? There's a lot of places in Jacksonville that are let's say they look a lot more visually appealing, right? We do happen to be on the beach in Jacksonville, but none of this is on the beach. And it goes back to that first point where all of my friends who chimed in here sort of got the point as well. If you go to those higher end neighborhoods above middle income, you're going to lose out on positive cash flow. That's one reason why we don't do that. So there's 4 neighborhoods here. Now, as I'm going through this training today, what you're going to notice is that I'm focusing on one of these neighborhoods, which is the west side of Jacksonville. It just happens to be this one. Why did I choose the west side versus any of the other 3 neighborhoods that we invest heavily in? No reason. I just did. Okay. All of these 4 neighborhoods are very similar. And I don't want you to get the impression that the neighborhood that we focus on today is any better for you than the other 3. It just happens to be the example I'm going through today. So we're going to focus on this neighborhood, which is the west side of Jacksonville. We have tons of success with investors here in the north side. This happens to be called Arlington, and this is the south side. So if you do become a JWB client, I don't want you saying, hey, listen, I listened to the webinar with Greg. He focused on the west side. I only want to be buying on the west side because you would be missing out on a great opportunity for some of these other markets. All right, so let's jump back into middle income and low income. Now, I want you to be below middle income. Okay, I wanted to give you a visual for what that means, okay? Your ideal neighborhood is closer to middle income than it is to low income. But it is not middle income, right? Middle income and above, generally speaking, is not going to hit the threshold for what I think a strong rental property investment is. And the threshold is simply, does it meet your expenses every single month? Does the income from the rents meet your expenses every single month? So your sweet spot is going to be slightly below middle income. But I want you to be a lot higher than low income. Low income is a place that I'm not going to manage your properties. It's a place where you're going to see a lot more turnover, a lot more maintenance costs. You do see violent crime sometimes in low income neighborhoods. So we want to be slightly below middle income, and that is your sweet spot. All right. And for any of those folks that do have questions on neighborhoods, on income, middle income, low income, as it relates to the right neighborhood, now would be a great time to those questions because we're going to jump to the next point here. All right. The way that I want you to focus on and determine what is middle income. So let me start over again. Not only do I want to tell you what we're doing here at JWB, I want to give you and equip you with the tools to do it yourself. So when I'm saying middle income, here's what I mean. The median household income in Jacksonville is a little bit over 52,000. I got that from the US Census. You can do this in any market that you're choosing to invest in as well. Simple Google search and you'll be able to find that. So then what I also did is I looked on the west side of Jacksonville. I looked through the US Census data again. It's actually a website called richblockspoorblocks.com. It's free, but you're able to actually see neighborhood incomes. It drills down into the neighborhoods. So the west side of Jacksonville is what you see visually represented here. We know that middle income in Jacksonville overall is about 52,000. And these are the income levels for one of our most popular areas, right? The west side here. So you can see incomes range from about $33,000 to about $45,000. And this is one of our more popular markets. So think about that. Middle income here is 52, and we're investing 33 to 45 right around there. That would be a great range. If you can replicate that in another market you're thinking about investing in, that's type of middle income that we're talking about, okay? The next thing to focus on are jobs, right? This is another thing where data on this is so simple to find, right? Why is it important that people have jobs in our neighborhoods? All right, that's a gimme out there. Why is it important that people have jobs in the neighborhoods, right? All right, who's gonna jump in here, right? It's gonna be, all right, there we go, that they can pay the rent. There we go. Alexa, so they can pay and stay. There we go, and they're staying for a long time. Very good point, Alexa, right? Alexa, I think, is taking the lead. Oh, man. But this information is so easy to get. Jamie says, high interest in that area, ability to pay, right? And the other thing to take into account is you want to have a diverse number of jobs, right? You don't only want one job provider. And the reason you don't want one job provider is because they could pick up and go somewhere, and then you'd be in a really tough spot. This model is certainly dependent on people having jobs, staying, and paying rent. So what does a good job area look like? Well, I'm going to stick with the theme of looking at the west side of Jacksonville. Okay, this is the same west side picture here of Google Maps. And one of the things that we looked at a long time ago when we were deciding where we wanted to invest is we wanted to see what were the major job creators there within maybe a 20-minute drive or a 10 to 20-minute drive, really. So you've got the first one on the west side of Jacksonville we looked at is downtown Jacksonville. All right, that's basically up here is where downtown is. And downtown in Jacksonville has over 55,000 jobs. That is obviously the single greatest concentration of jobs in Jacksonville. A great thing to be, a 10-minute drive from, which is what you really are if you own properties here or you rent and you are here on the west side. So you got 55,000 jobs there. NAS Jax is another great job creator. So this Jacksonville Naval Complex, it's known as Naval Air Station Jacksonville, 25,000 jobs there. So really strong, Amazon, anybody ever heard of Amazon, right? 1,500 jobs for a distribution facility that was built recently, one of two distribution facilities actually in Jacksonville for Amazon, and 1,500 jobs literally right here. And then just recently, this past year, Wayfair came in and built a new distribution facility actually right next door to Amazon, and they are filling it with 250 jobs. So, you want to look for these major job creators, right? Look for things that are driving in the thousands of jobs is what you want to see. And you want to be within a 10 to maybe 20-minute drive so you know that there's a significant amount of jobs that your residents can have so that they can earn money, so they can pay your rent. Okay? So that is the job. So how do you get this information? Really just doing Google searches. Look at your local business journal to see which jobs have recently come into the area, which major employers have come to the area. You can go to the Chamber of Commerce site for your area and see who are the major companies. Jacksonville happens to have 3 Fortune 500 companies. If a city has a Fortune 500 company who's headquartered there, believe me, it's going to be on their Chamber of Commerce because they want everybody to know that. So really not hard for you to find job information and then just look and see, are they within 10 to 20 minutes of a drive there? All right, so we talked a little bit about income levels. We want to be below middle income. We talked about jobs. We learned how to actually find that information. And now we're going to talk about crime, right? Another no-brainer. We don't want violent crime. So did you guys, I actually did a little bit of research before the webinar here today. Anybody have a guess for the most dangerous city in the US? Oh, we do have some music here. All right, we have some Jeopardy, Final Jeopardy music here. Kate is on point here. All right, so let's take a few guesses out there. What do you think the most dangerous city is in the US? All right, who do we got here? We've got Wilmington, Delaware. Interesting. I would not have guessed Wilmington, Delaware. It is not Wilmington. It is not Baltimore, which is something I would have thought. I'm a huge Pittsburgh Steelers fan, so anybody who can, you know, maybe talk a little bit of trash on Baltimore, I would have been okay with. It's not Baltimore. St. Louis is the answer there, Jamie. St. Louis is the answer. And Yuan, she asked about Jacksonville. It is not Jacksonville. Oh no, I'm sorry. It's from somebody who's anonymous. They asked Jacksonville, trying to get me on that. It's not Jacksonville. The answer for the most crime-ridden city, according to all the major publications here for 2019, is St. Louis. You can Google it. All right. So I wanted to take a look at what that looks like for some objective, tangible data about what you can do to actually make a decision of where you want to invest. So I pulled the crime maps, and I wanted to show you where we would never invest, right? We don't invest in neighborhoods that look like this. This is St. Louis, okay? So you have this ability now to look at crime maps, which a lot of investors do before they make a decision, and they give you a crime risk based on the number of incidences that are public record, and they give you a visual. It's pretty helpful. Here's what St. Louis looks like. This is the most crime-ridden area in the world, or in the U.S., and so this is a place that you probably don't want to own rental properties, in my opinion, right? If our neighborhoods in Jacksonville looked like this, we would be in a tough spot because I guarantee you we would have a ton of issues. We would have a ton of maintenance issues. We would have a ton of turnover. And oh, by the way, people might be put in danger, and that's not what we are about here for our internal staff, and definitely not for your investment properties, right? So this is where we don't invest. Here's a place that we do invest. I'm going to continue with the theme of the west side of Jacksonville, right? So here's that same crime map, all right? And you can see the less safe to the safer areas. Now, truth be told, I'm colorblind, so I'm going to totally fail on the variations of colors here. But the key here is that you don't want to have a ton of violent crime, or a ton of these dark areas, right? Dark areas mean violent crime, okay? Now, at the end of the day, actually, you know what? I should take a step back. Dark areas don't necessarily mean violent crime. They mean a lot of crime, okay? This does not talk about the violence level within the area, but you don't want to see a lot of dark areas. I think we can all agree on that, okay? One thing I want to point out is that when you're investing in rental properties, again, I'm going to come back to this concept that there is no perfect investment out there, okay? If you want to invest in an area where you have no blips on the map and you see all clear as far as this crime map here, you're going to be investing in an area on the beach, right? An area where home values are so high that the rents won't get you to where you need to be in order to cover your expenses. So one of the things that everybody needs to understand if they're going to be investing in cash flowing rental properties is that you're going to be investing in a neighborhood that is below middle income, right? Now, the reality is that all neighborhoods have some crime. You can't get rid of crime, right? But what we want to avoid is a preponderance of violent crime. But what you're going to see in even the neighborhoods that we've invested in for 13 years, where I own 300 rental properties, you're going to see that there are some pockets that are shaded dark. Does that mean that I totally write off this entire area as a potential place to invest? Absolutely not. I go into this knowing that this is a neighborhood that I may not choose to live in myself, but this is a decent, hardworking neighborhood, and I also know that crime happens everywhere. What doesn't bother me, to be quite honest, is the crimes that are done by stupid people just because they have an opportunity to do it. So, you know, vandalism and things of that nature, clearly I don't like that. But Has my property ever been vandalized that I own? Yes, right? And if the house is vacant, has something been stolen from a house that I own myself? Absolutely, right? I've been doing this for 13 years for over 300 properties that I still own today. So I just want to get you in the mindset that I don't want us to sit on our ivory towers and think that there's going to be no crime ever. We need to be realistic about where we're investing. And this is a very realistic picture of one of our 4 major neighborhoods here in Jacksonville. Any questions on crime and how important that is for JWB? Now would be a great time to ask. And Kazi, thank you for asking. She or he said, which tool did you get it from? And that's a really great point. So Trulia is where I get this information from. Excuse me here. Oh, back up a couple things here. So it's right down here at the bottom. You can go to Trulia. They have these crime maps. And you can go to trulia.com/neighborhoods, look up any city in the area, and you'll be able to see this exact same crime map. Okay? The big takeaway here is don't be scared by seeing some shading. Don't let that sway you from not investing in an area overall, right? But if you see a whole lot of dark shading, you probably are in St. Louis, and you probably don't want to go there. We've got a couple other. Oh, Jim, thank you, Jim, for chiming in there. He thought Chicago was the most crime-ridden city. Not Chicago, not Chicago. So, all right. So we've talked about the 3 major points here, and we're about a half hour in. We're going to jump to another question that I get all the time. How important are school ratings? You'll notice that I didn't identify this as one of the top 3 things that we look at JWB, and here's what I want to show you, right? So I pulled the school ratings for the west side of Jacksonville, and for all of you, you can pull the same data if you go to greatschools.org. You can also see it in a number of places. They're integrated with the Zillow website, so you can, when you pull up a house for sale or for rent, they're going to show you what the Great Schools rating is. Well, take a look at this. It's on a 1 to 10 scale, and 1's the worst, 10's the best. This is that same west side neighborhood. Does that surprise some of you out there, right? We all hear, oh man, I want to be in a great school district and all that other good stuff. Well, JWB, who has bought literally thousands of properties and has thousands of successful investors who are also investing, is showing you here that our neighborhood ratings are low. Okay, again, coming back and being realistic about this. Would I love for all of our neighborhoods to be on the beach, and would I love for them to all have 10 school ratings? Absolutely. I know that if I kept that as the threshold, I would miss out on the first reason why I'm coming to this asset class, which is consistency and return on investment, right? So you can't have it all. You have to go into this understanding what you're willing to make a priority and what you're willing to give on. And our approach is when it comes to school ratings, they do not directly correlate to success, which may shock some of you. But what is more important than school ratings, right? If you're thinking about consistency, return on investment, potential for long-term growth, what is more important than school ratings? This is a little bit of a tough one. So I'm going to give myself my own answer there. So I'm really charging hard to get this book here. Actually, we do have a couple of folks here that are chiming in. All right, let's see what we've got here. So Kazi says, unfortunately, the below middle income family kids don't go to the best schools. It's a great point. We're being realistic about this. We're investing in below middle income neighborhoods. You are going to see below average schools in those neighborhoods. Do higher income school ratings usually equate to higher income neighborhoods from Alexa? And the answer is typically yes, you do. And so what is more important than school ratings, and what do we pay attention to here at JWB? Long-term leases, lease renewals, which all directly correlate to duration of tenant stay. So what I would love for you all to consider is the fact that school ratings and high school ratings would be great if you could get them, but they, and just by themselves, don't determine success for your rental property portfolio. They are one factor that may have a positive impact on a future factor, and that future factor is duration of tenant stay. So we know that the neighborhoods we invest in are going to have below average schools. But what we have spent 13 years perfecting is how do we work within neighborhoods that have below average schools, but we can still accomplish duration of tenant stays that are extremely long. Because if you show me a rental property investor and their portfolio, and you show me somebody who's had long tenant stays, I know that person is going to have a smile on their face when they're talking about the rental property investments. It's just that simple. If you have constant turnover, I don't care what school system you're in, constant turnover is going to kill your returns. So we don't necessarily focus on school ratings because I know they're going to be below average. What we focus on are the things that we can control. Signing folks up for long-term leases and renewing them are the best things that I can do to increase your duration of tenant stay. And that's how I know that I'm going to be able to perform for our clients. So while most property management companies only sign one-year leases, what I am offering to you as an alternative is to invest in those below middle income neighborhoods, but don't sign one-year leases. Sign 2- and 3-year leases. That's what we do. And then focus on lease renewals, right? We treat lease renewals like a sales process in our organization. So any property manager that you're working with should be held to that same standard. Because when I renew a lease for one of my clients, I literally save them thousands of dollars in return on investment, right? I mean, we're talking about cash flows in the hundreds here each month. When I can do something that is going to put thousands of dollars in your pocket, that is going to have a huge bump to your rate of return. So these are the things that I focus on, full well knowing that the neighborhoods that I invest in are going to have a below average school rating. And I hope this makes sense to all of you, because this is different than what you're going to hear elsewhere. This is coming from somebody who actually owns 300 rental properties and has been able to make them positively cash flow, rather than a lot of property managers who probably don't own any rental properties. So this is what matters here. These are some of the stats that we've been able to achieve. And so the thing I want to share with you is this is all possible even if you're in a neighborhood where you have below average school ratings, because you've got to be in neighborhoods typically that have below average school ratings to accomplish the bigger win. The bigger win being consistency, positive return on investment. So this is just year to date. I just pulled these stats. We've rented over 700 houses. Our average duration of lease signed is 27 months. Our historical re-sign percentage is 70%. And our average duration of tenant stay is 49 months. One little nugget to share with all of you as well. I know from looking at all the numbers that I need to achieve at least a 3-year stay for our residents in order to hit my return expectations for my clients. I would imagine this is probably something that everybody else either should know or maybe does know, if they are managing your money, if they are property managers, if they're a turnkey provider. Ask that person what their average duration of tenant stay is. Ours happens to be 49 months, and that's why I sleep well at night knowing that our clients are served well. Most folks do not achieve 3-year tenant stays, and that's why most folks are not happy when it comes to rental property investments. And here's a client named Matt Lucas. Matt has been investing for about 4 years with us, owns 10 properties, just like the one we saw on Fire Tower, a little over $400,000 invested. And we've been able to generate over $122,000 of total returns for Matt. For over a 13% return on investment. We would love to bring on clients just like Matt. Hopefully that is you, and we would love to have the same type of experience. I know when Matt and Lori, his wife, came to JWB and I was sitting down with them, they told me that their goal was to build up enough rental income so that they could scale back the hours of Lori's job, maybe even have her leave her job, or definitely scale it back so they could spend more time together. So if you can share and have a similar idea of what you'd like to get out of this rental property portfolio, that's what gets us super excited. What got Matt super excited, not just the numbers, was the way that we treated our staff. So he came down to one of our campus tours, and see here, he said, seeing the numbers, the potluck lunch, the focus you have, not only on us, but also on your staff, because if you take care of the staff will take care of the client. And it just seemed like a really good match for us. That is what we're all about. You can do a little bit of Google searching on us. We've won Best Places to Work, I think, for the last 142 years in a row. That's a joke. We've won it for a lot of years in a row. The staff is what we really feel separates us. So without any further ado here, you certainly can go to chatwithjwb.com and schedule your appointment there. Have a wonderful day, everybody.